Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on? Well, the markets, they keep trying to push them up, but they're pulling back a little bit now, right? The HYG down below the 50-day. Okay, that's good. That means they're coming back in. Now, we're coming into the holiday season. I can't believe, Thanksgiving's next week. Did the year go by fast for you also? It just flew past. So the holiday season between Thanksgiving and Christmas, usually a strong time for the stock market. My indicators are saying not so fast, not this year, not going to happen. We're going to get a correction right in the time of the strong month, right? The time between Thanksgiving and Christmas, we're going to have a correction, maybe 10, 20% down in the stock market. Once again, just my take. Yours may be completely different, but that's what my indicators are telling me. We'll see how that plays out. Now, I had a couple of interesting comments on the last video. One was funny. He said basically anyone that comes out with a hooty hoo, he can't take them seriously. He can't watch my video. He clicked it off. He says he clicked it off, but he watched long enough to leave a comment telling me what a clown I am. I know I'm an acquired taste. Not everybody likes me, and that's okay. So if he left, that's perfectly fine. Now, here's the other comment we're going to talk a little bit about today. This gentleman left a comment, and he's not alone in his line of thinking, but he thinks houses will never be this cheap again. He thinks this is the cheapest that houses will ever get. Now, I forget his name, but maybe it was Dave Ramsey using a fake name. I don't know, right? But somebody thinks that this is the cheapest houses will ever get. So you better hurry up and buy if you want to get a house this cheap, because we're going to have that 50-year mortgage coming out, right? And that's going to make prices go higher. We're going to have portable mortgages, so people that are locked in at 2.79, they can transfer their mortgage to their new property. And we're going to talk a little bit about this, but houses are never, ever going to be this cheap again. So hurry up and buy, right? Okay, let's talk about this a little bit. Let's just talk about the general economy here. People, well, they're kind of tightening up their belts. You see, they don't have as much money as they think they have. Well, if they don't have it, they know they don't have as much money. Now, take Chipotle, for example. The low and middle income guests are not returning because they can't afford the price hikes that Chipotle has put on. You see, most people right now, they're financially squeezed, right? They have less cash. Now, if they have less cash, well, they have more of. They have more debt. They can't make their payments, can't make their credit card payment, can't make their auto loan payment. Can we know they're not making their mortgage payments? You know, mortgage foreclosures went up 20% last month. 20% just in last month. And they're going to continue higher because people cannot make a mortgage payment. What happens when they can't make your mortgage payment? You get what's called a forced sale. You get a foreclosure, right? They put the property on the market, increases the inventory, prices start to come down. Now, that's very interesting. We also got the layoffs, right? The layoffs. Now, they're blaming this on AI. AI is laying a lot of people off. I don't even think the AI layoffs have hit yet. I just think these are the natural economy coming to a standstill layoffs that are happening now. I mean, UPS laying thousands of people off right before Christmas. Very shocking to me. Same with Amazon. I guess we're not expected to be having such a good Christmas. But when you lay people off, it shrinks the buyer pool for houses, right? Hard to buy a house if you don't have a job. So the pool of buyers is starting to shrink. Now, what do we got? We got inflation. Inflation is climbing, right? Inflation's getting worse. It's not getting better yet. They're cutting rates, which is going to make inflation get worse and worse. What's going up? Well, let's just start with insurance. My car insurance skyrocketed. Housing insurance skyrockets. Medical insurance, that's going off the charts, right? If the government doesn't subsidize, people aren't going to be able to afford medical insurance. But but everything's going up, right? Property taxes going up. Government needs more of your money because they don't have any, but they don't realize you don't have any either, but they want more of it. Now, this is not boding well for the housing market, right? I mean, the layoffs are going to continue. I don't see them letting up. The credit scores are going down. When you don't make your payments, what happens to your credit score? Down, down, down. You don't make your student loan payment, it drops your credit score. This is a problem. And I see mortgage rates not going down. They're actually going up, right? They bottomed out around 6%. Now we're headed back towards 7%. Why are we heading back up when they're cutting the rates? Well, you see, that's the short end of the curve. That's the 2-year and less, right? That's what the Fed controls. The long end of the curve is controlled by the market. If the market expects, well, inflation to continue higher, it's got to charge more higher interest for the loans, right? Okay, so inflation going up, your mortgage rates will be going up to match the inflation, right? So this is a problem. This is a problem for the housing market, but yet this gentleman's telling me that houses are never going to be cheaper because we have the 50-year mortgage coming. Now, to me, the 50-year mortgage is just it's a joke, right? I mean, the fact that the Donald's pushing this is kind of disgusting to me because he knows it's a joke. Look at 50-year mortgage. Let's say you get one right out of college, 20 years old, right? 50-year, you'll have it paid off by the time you're 70. Isn't that great? Yeah, okay. Now, the average home buyer is now over 40 for the average home buyer, right? So 50-year mortgage to get on to age 40, you'll be in your 90s when that gets paid off. Look, at 50-year mortgage is the equivalent of renting your house, right? You're renting from the bank is what you're really doing because there's no principal being paid down on your mortgage at all. As a matter of fact, after 30 years of paying on a 50-year mortgage, it's like 24% of your house is paid off. You still got 76% of your house still to pay off. The 50-year mortgage is a complete and utter joke. Even a 30-year mortgage is a joke. I recommend getting a 15-year mortgage if you can. It saves you so much money over the course of the loan. And if you have a 30-year mortgage, here's a simple trick, right? If you don't have a prepayment penalty, just make an extra payment at the end of the year. This will cut your length of time that you're paying on the loan down dramatically. If you do it from the start, it cuts it down to about a 20-year mortgage, right? Just by making one extra payment a year. Now, that's a fascinating little hack that a lot of people don't know, but it makes the payment terms shorter. So even a 30-year, you should make an extra payment every year if the bank allows you to do this. But the 50-year is a joke. It's not going to make houses go up. Not a chance. It's not going to make them... It doesn't make them more affordable, right? I mean, maybe your payment's $100 a month less. How much affordability is that really to counteract the other 10 problems I just went over that the buyers are having trouble right now with? The buyers are out there, they're having trouble. Buyer pool is shrunk so small that we don't have any transactions going on at these elevated prices. Now, once the prices start to come down 20, 30, 40, 50% or more, if we go into a Great Depression, you could see them drop 80 to 90%, shocking as that may be, because everybody's levered on this debt. When the debt bubble pops, it's going to be disastrous, right? I mean, prices are just going to plummet. Stock market's going to crash. House prices will crash. Everything will be coming down. But this gentleman, he's telling me it's never going to be cheaper, so hurry up and buy so you can be that bag holder, right? Dave Ramsey wants you to be the bag holder. I don't know why he wants you to be the bag holder. Actually, I do. He's invested in the real estate business. As more houses sell, the more money Dave Ramsey makes. He wants real estate to do well. He's talking his book, if you will. Now, okay, the other thing the gentleman brought up is the portability of your mortgage. Now, let's say you got 2.75 mortgage. mortgage over here, and you're now going to be able to take that mortgage with you to buy the new house with. Now, this is really fascinating to me. Now, it's possible if we throw out the Constitution, throw out all contract law. You see, you have a contract with the bank, right? The bank does not allow you the portability of your mortgage. The bank does not allow you for someone to come in and assume the mortgage. The bank bases their whole premise on the fact that you're going to be moving in 5 to 7 years and they're going to get that mortgage back. See, right now, if you're locked in at that 2.75, the bank's losing money because they got to borrow money up here at the 6 to 7% rate, so they're losing money on you every month, right? The banks are in big trouble. The banks are going to go under, right? And who do the Federal Reserve want to protect the most? Me? They want to protect you. They want to do good things for you. They want to do good. No, they want to protect the banks. They're not going to let you have portable mortgages. They're not going to let you have assumable mortgages because contract law will take precedent, where some parts of the Constitution are still left intact. Now, I know we've gotten away from the Constitution. I mean, Constitution says only gold and silver are money. Right now, we have 50,000 different forms of money. When did this happen? That everyone could start their own currency, their own crypto, if you will, and call it money, right? I mean, we got Bitcoin, Ethereum, Fart Coin, Trump Coin, Melania Coin. I mean, we got 50,000 different coins, and all of them are claiming to be real money. Real money, the only real money there is gold and silver. Now, you know that if you watch my channel, that's real money. This crypto fugazi stuff, well, it's going to go away. You watch. I mean, maybe one will still be left. Maybe Bitcoin will be trading around $1,000, you know, because you can transfer money between people out of country. You can do all kinds of fun stuff with it, but it doesn't really have any value, right? The value is gold and silver. Everything's a derivative off of gold, right? That's exactly what all the purchasing power melts down into. Now, back to the housing market. So this gentleman thinks that houses are never going to be cheaper because we're going to have assumable mortgages, portable mortgages, and we're going to be 50-year mortgage. Maybe we get the 100-year mortgage going. But none of this is, well, first of all, the portable, the assumable, could only be on new mortgages, right? And those will be at the 6, 7% right now. And maybe when rates go up to 10, 12, 14%, you'll be able to move your 7% mortgage. But the 2.75% mortgage, they're not going to let you move that. It goes against all contract law, right? You have a contract with the bank. They're going to protect the bank. They're not going to protect you. I'm sorry. It's just not going to happen. Now, assumable? No. Once again, when you sell your house, it's in your contract. They cannot assume the loan. And the banks base they base all their evaluations on you moving every 5 to 7 years and getting a new mortgage, and that 2.75 is now paid down. And then you got a 7% new mortgage, and the bank is now starting to get flush again. But the banks have big problems. That's the smallest of their problem, is your little loan with the bank. They have much bigger problems, right? They don't know how to get the money back that they've lost in the bond market. They don't know how to get the money back that they've lost on their trading desk. This whole thing is a house of cards waiting to come down. Houses are a house of cards. Those prices are not going to stay up here, contrary to what this gentleman's trying to explain to me, that the prices will never be this cheap again. So get out there and buy so you can feel maximum pain when we come down that 40, 50, 60%. And you're sitting there, well, actually, they'll just give the keys back to the bank. You'll be one of the bag holders. You'll have lost all of your money, all of your equity. You'll be wiped out. It doesn't take that much to wipe out your equity. A lot of people are sitting on a lot of equity right now. Now, the only way they can tap that is with the HELOC loan, right? A HELOC loan is a home equity line of credit, and they try to tap it with that. Well, what they're really trying to do now is send out these things where they're going going to partner with you if you have equity. They're going to give you a loan just like a HELOC, but you don't have to pay it back. The interest is just running in the background. When you go to sell the house, refinance the house, or you die, that's where the bank will collect all the money. Now, I recommend to stay away from these type of loans. They're called home equity investments. Home equity investments. They're marketing them like a HELOC because they're going, hey, let me give you $100,000. I just got one in the mail. Let me give you $600,000. We'll be a partner in your house. We'll go on the deed for only 25% of your home. And then when you die or when you refinance or when you sell, we'll just take our money out. And that's we'll be a partner. What they don't tell you is they're charging you 10, 12, 14% exuberant rates for to be your partner in your home, and it's also based if the equity goes up. Stay away from those. Those are dangerous. Those are scams. Those are people trying to rip you off for your house. Be very careful. Now, HELOC loan is something different. Yes, those interest rates are 12% also, but you can pay that back and you can get your house back, right? Yes, they're going to attach that as a lien also, but it's just at 12%. It's not a partnership where they go after the equity in your house. You want to stay away from that stuff, but houses will never be cheaper, so you guys got to get out there and buy as many as you can, so us realtors, we can make a lot of money, because it's always a great time to buy. If you like this stuff, give me the thumbs up, punch that subscribe button, get out there, everybody. Have a great day. We'll talk again real soon. Bye-bye now.